The Shiba Inu chart is signaling a move that could either unleash its next parabolic run or confirm the dreaded return to bearish consolidation. The fight for a crucial price level is underway right now, with millions of dollars in volume backing the battle. Technical analysts are drawing lines in the sand. Is the SHIB army prepared for the technical showdown that will define the rest of November? We break down the raw numbers. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The focus of this report is the current technical and sentimental outlook for Shiba Inu as of November 12, 2025. Over the last few weeks, the price action has demonstrated significant volatility, a hallmark of the asset, but it has repeatedly failed to maintain a sustained breach above the key resistance zone established in late October. The overall crypto market context remains a critical factor, with a large portion of the current rally being tied to broader market enthusiasm. Shiba Inu is currently trading at 985 units, an approximately 1.16% increase in the last 24 hours, attempting to reverse the heavy correction seen earlier in the week. This price point sits squarely at a pivotal technical crossroads. The importance lies in whether this is a minor technical bounce or the beginning of a genuine recovery driven by renewed buying interest and ecosystem utility growth. The main event driving current speculation is Shiba Inu's attempt to stabilize above the psychological price level of 990 units, which simultaneously acts as a technical resistance based on the 50-day moving average on the daily chart. Over the past 72 hours, Shiba Inu faced heavy selling pressure, dropping from a high near 1014 units down to a low of 959 units before the current slight recovery to 981 units. This sudden dip tested and held a critical support established in the first week of November. The general market sentiment remains one of fear, currently scoring 26 on the Fear and Greed Index, according to reports, indicating that this price action is occurring against a backdrop of wider investor caution rather than aggressive market euphoria. The short-term movement is therefore highly susceptible to minor news or a sudden shift in whale-level sentiment, making this period one of intense observation for traders. Following the recent dip and recovery, Shiba Inu's 24-hour trading volume has settled at around $160 million, significantly lower than the approximately $347 million seen during the high volatility peak in mid-October. This lower volume on the upswing suggests a cautious recovery rather than a definitive breakout, analysts note. The market capitalization of Shiba Inu currently sits at approximately $5.8 billion. This figure places it outside the top 10 cryptocurrencies by market cap, indicating that while it maintains a massive community, institutional capital inflows are subdued compared to higher-ranked assets. The price action itself shows a clear rejection at the 1014 unit mark on November 10th, creating a local high resistance barrier. The market's reaction has been tentative. Smaller buyers are accumulating on dips, while large volume traders appear to be waiting for a clear break above the 1030 unit resistance before committing significant fresh capital. The relative lack of liquidity in the order books below the 960 unit mark suggests any further sell-off could lead to rapid slippage. As per on-chain data, the key technical indicators present a mixed and highly nuanced picture. The price is currently trapped between the major moving averages. The 50-day moving average acts as immediate overhead resistance, currently positioned near 1010 units. Conversely, the 200-day moving average is offering firm, long-term support, positioned down near 890 units. The failure to break the 50-day moving average indicates the short-term trend remains weak. Community trackers show the 14-day relative strength index is fluctuating within the 30 per 70 neutral zone, specifically hovering around the 45 mark. This indicates a relatively balanced market momentum with neither excessive overbought nor oversold conditions, suggesting the current volatility is localized rather than exhaustion-driven. Analysts note the moving average convergence-divergence line is currently below the signal line but is beginning to flatten, signaling a potential bullish cross if buying pressure continues. However, a break below the zero line would be a significant bearish confirmation, pushing the price towards lower support levels. According to reports from major on-chain analytics platforms, the count of large transactions over $100,000 has decreased by 15% in the last 48 hours compared to the week prior, suggesting that large wallets are reducing their immediate exposure or pausing major accumulation during this critical support test. Expert analysis suggests that Shiba Inu is experiencing a classic phase of consolidation and retesting after the significant October price movements. The primary implication is that the outcome of the battle between 960 units and 1030 units will likely dictate the price trajectory for the remainder of November. Analysts from leading technical outlets note that a sustained break above 1030 units, especially on higher than average volume, would invalidate the recent bearish structure and open the door for a retest of the October highs near 1150 units. Conversely, a decisive drop below 960 units, which acts as the immediate structural support, could lead to a swift correction toward the critical long-term support at 890 units. Fundamentally, the slow but steady progress of Shibarium adoption continues to build a base, but its economic activity remains thin. As per on-chain data, meaning the asset is still heavily reliant on broader crypto market liquidity and speculative trading. Developer hints remain focused on the Layer 3 solution and further integration of the governance mechanism, suggesting a long-term utility focus rather than short-term price boosting. The team has been notably silent on price action, adhering to the strategy of building first. Community reactions on social media are mixed. The dedicated SHIB army remains highly bullish, with popular Twitter accounts rallying members to buy the dips and hold the lines at current levels. However, frustration is palpable among short-term traders who entered near the October highs, leading to increased chatter about stop-loss hunting and market manipulation. Social media sentiment is primarily driven by anticipation for any news regarding a major exchange listing or a significant announcement from Kusama, indicating that the community's focus is still on high-impact fundamental catalysts rather than the technical consolidation phase itself. The short-term forecast is constrained by the 960-unit support and the 1030-unit resistance. A breakout above 1030 units could lead to a target of 1150 units within the next 2 weeks. However, failure to hold 960 units would confirm a bearish scenario, with a likely retest of the 890-unit long-term support. Given the neutral relative strength index, a prolonged period of sideways consolidation between these two levels is the most likely outcome, sources suggest, allowing momentum indicators to reset. The long-term outlook remains intrinsically linked to the utility of Shibarium and the success of the Shiba Inu ecosystem. Analysts predict a minimum price target of 1442 units and a potential maximum price near 5,804 units by the end of 2026, assuming a renewed bull market and successful rollout of key ecosystem features like Treat and Shi. The continued deflationary mechanics, driven by the burning mechanism, are a key factor supporting the long-term bullish narrative, providing a continuous, albeit slow, reduction in the circulating supply of around 589 trillion tokens. A balanced opinion must acknowledge the significant volatility risk inherent in Shiba Inu. While the technical structure shows strong support being defended, the underlying fundamental utility, while growing, is not yet robust enough to solely sustain a major price surge. The primary risk is a sudden and sharp decline in the overall crypto market, which would inevitably drag Shiba Inu below its key support levels. Furthermore, analysts caution that the high level of retail interest makes the asset vulnerable to market makers hunting for stop losses, as seen in the recent sharp drops. Investors should view the area between 960 units and 1030 units as a high-risk, high-reward zone. A conservative approach suggests waiting for a confirmed breakout above 1030 units before initiating new long positions, or conversely, a clear breakdown below 960 units before considering short positions, mitigating the potential for false signals. The battle lines are clearly drawn on the Shiba Inu chart, with the price trapped in a tense consolidation pattern. The critical 1030 unit resistance is the gate to a major November rally, while the 960 unit support is all that separates the asset from a deeper technical correction. The fate of Shiba Inu now rests on whether the sheer force of market liquidity or the underlying fundamentals of the Shibarium ecosystem win this technical tug-of-war. The day is over now. Remember to give it a big thumbs up to see our most recent material, share it, and subscribe to the channel.